Welcome to the Deep Dive, where we take stacks of information and really try to distill them into those aha moments you're looking for. Today, we're diving into the global vacation ownership market. You probably know it as the timeshare market. We've got a really comprehensive outlook here, stretching all the way out to 2033. And our mission today is to unpack not just the, frankly, staggering numbers driving this industry, but also why. Why are these shifts happening? What does it mean for how we all travel in the future? I think you might be surprised by just how much this landscape is changing.
It really is a dynamic sector. And what's fascinating to me is how this whole idea, this concept of shared vacation property, it's evolving and really gaining serious traction globally. So we'll be looking beyond just the raw data, going region by region, trying to understand not just the what in these projections, but the underlying why, hopefully helping you grasp what the future landscape of leisure travel might look like.
Okay, let's unpack that then, because we are talking about serious money here, aren't we? And it sounds like a pretty fundamental shift in how people are approaching their holidays. So what's the overall health? How's the global vacation ownership market looking? Is it still niche, or is it really carving out a bigger slice of the travel pie now?
The big takeaway, it's absolutely significant growth. And I mean, not just a gentle uptick. Back in 2021, the market generated around 16.5 billion US dollars.
Okay.
Fast forward just to 2025, revenues are projected to climb to over 22 billion.
Wow.
But here's the really astonishing part. By 2033, this market is expected to nearly double its 2021 value. We're talking close to 40 billion US dollars.
Doubling.
Doubling, yeah. This reflects a very healthy compound annual growth rate, the CAGR, of about 7.6% over that whole period. It just underscores this rising, sustained demand for these kinds of shared vacation property models.
Nearly doubling in just over a decade.
Mm-hmm.
That's incredible. So, yeah, this isn't just some slight trend. It really does sound like a fundamental reevaluation of how people access their leisure time. What does that kind of consistent, strong growth tell us about, the future of leisure travel and maybe consumer preferences?
Well, it tells us consumers are increasingly prioritizing things like flexibility, quality, and maybe a smarter approach to vacationing overall. People seem to want access to high-quality resorts, diverse experiences, but maybe without the full financial burden or, the maintenance headaches of owning a second home outright.
Right.
So the vacation ownership model, it offers a predictable, often high-standard option. And this sustained growth, it really signals a changing paradigm in leisure travel and how people are thinking about using their assets for experiences.
Okay, so with that kind of global expansion, I'm really curious where the real action is. You know how a global average can sometimes mask these localized explosions of growth. Are there particular regions or maybe specific countries that are truly leading this charge? Where's the exceptional dynamism?
Absolutely. I mean, while we see growth pretty much across the board, some regions and countries are truly standing out. We can break it down, highlight the biggest players, sure, but also the fastest climbers. It gives you a clearer picture of where growth is most concentrated and maybe even hint at the why.
Okay, let's start with what you mentioned, the fastest growing.
Yeah.
Where is that impressive momentum really coming from?
Right. So if we look at the global landscape, the Asia-Pacific region really emerges as the fastest growing market. And this is a critical insight, I think. It points to some major economic and social shifts happening there. It's projected to surge from roughly, $4.2 billion in 2021 to over double that, reaching $11.5 billion by 2033.
Wow, double again.
Yeah. That's a remarkable 8.9% CAGR. That's significantly higher than the global average we just talked about. And this explosion of growth, it reflects rising disposable incomes, definitely, a burgeoning middle class, and maybe a strong cultural emphasis on leisure and travel that's emerging or strengthening in many of these nations.
That nearly 9% annual growth is really striking. So which countries are actually powering that within Asia-Pacific?
Yeah.
And what's driving their individual paths?
Well, no surprise, China absolutely dominates the regional market in terms of size. It's projected to grow from about $1.5 billion back in 2021 to over $4 billion by 2033. That's a strong 9.1% CAGR. Its sheer scale, the size of its domestic tourism market makes it a powerhouse.
Right.
But for sheer momentum, you have to look at India. It shows the highest growth rate in the entire region.
Really?
Yeah, projected to more than triple its market value. From around $440 million in 2021 up to $1.3 billion by 2033. That's a rapid 9.8% CAGR.
Wow, triple.
This explosive growth, It suggests a rapidly expanding middle class that's eager for these structured leisure experiences, perhaps leveraging, new domestic tourism infrastructure and maybe a cultural shift towards more organized holiday planning.
Triple-digit growth rate for India.
Oh,
That's just an astonishing rate. What else is happening in Asia Pacific? Is it just about those two giants?
no, not at all. Singapore also really stands out. It's set to nearly triple its market value, too, from about $156 million to over $430 million by 2033, which reflects its status, I think, as a major regional travel hub and its high-income population demanding premium experiences.
Makes sense.
And beyond those, we see really significant contributions from Japan, South Korea, and Australia. They're all growing in that high 7% to mid 8% CAGR range, so still very strong. And Southeast Asia as a whole block, along with Taiwan, they're also showing very robust expansion. It makes it a truly booming and actually quite diverse landscape for vacation ownership.
Okay, so if you're tracking global travel trends or shifts in how people vacation, Asia Pacific is clearly the region to watch right now. That kind of dynamic growth across so many different countries, that's a real game changer.
Definitely. But while Asia Pacific is growing the fastest, we shouldn't forget North America. It remains a hugely significant player, holding on to a substantial market share. It's perhaps a more mature market, yes, but it's still expanding significantly. Its market stood strong at nearly $6 billion in 2021, and it's forecasted to hit nearly $14 billion by 2033. That's still a very respectable 7.2% CAGR.
Yeah, I imagine the United States is a big part of that, just given its size and, the established tourism infrastructure.
Yes.
But is it the only driver, or are we seeing dynamism elsewhere on the continent, too?
Oh, indeed. Within North America, yes, the United States dominates. It generated over $4.8 billion in 2021, expected to reach $10.7 billion by 2033. That's a 7% CAGR, so a massive market. Driven by, I think, a long-standing culture of vacation ownership and these extensive resort networks.
Right.
But it's definitely not alone. Canada follows with a really robust 8.3% CAGR, growing to over $1.6 billion by 2033.
Oh, interesting. Faster than the U.S.
Exactly. And Mexico also shows strong growth, reaching nearly $1.5 billion by 2033 with a 7.7% growth rate. So yes, while the U.S. is the largest by far, its neighbors are actually growing at an even faster clip, which could indicate maybe expanding cross-border travel or new resort developments catching on there.
Okay, that paints a clear picture for North America. Interesting dynamics there. Moving on, what about other regions that are showing strong potential, particularly maybe those with rapidly developing economies?
Well, the Middle East is another region demonstrating really strong momentum. Its market is projected to grow from just over $1 billion in 2021 to $2.6 billion by 2033. That's at a notable 8.1% CAGR. And this growth, I think it's intrinsically linked to those broader economic diversification strategies we hear about and the ambitious tourism development plans in many of those nations.
What stands out to you within the Middle East, then? Are there specific countries leading this impressive expansion? And how does it connect to those bigger economic goals you mentioned?
Saudi Arabia actually leads the region. It's projected to hit over $1 billion by 2033 with an 8.3% CAG. And this aligns perfectly with its Vision 2030 goals, which heavily emphasize boosting tourism.
Right, yeah.
What's also fascinating is the UAE, showing really high momentum, growing at an 8.7% CAGR to over $540 million. And Qatar, too, displayed impressive growth, 8.6% CAGR, reaching over $180 million by 2033.
So all very strong growth rates.
Exactly. These countries are investing heavily in luxury tourism infrastructure, trying to attract international visitors. And the vacation ownership model, it offers a pretty compelling option, both for residents and visitors looking for those high-end leisure experiences. And we should also mention Turkey and Egypt. They contribute significantly to the regional growth, too, making it a diverse and expanding market across the Middle East.
Okay, so from the Middle East, let's turn our attention over to Europe. It's a continent with such diverse economies and, very different tourism patterns. What's the picture looking like there for vacation ownership?
Europe's market is also expanding, definitely. It was valued at over $3.7 billion back in 2021, and it's projected to hit nearly $8.4 billion by 2033. That comes out to a 7.1% CAGR. So it's a significant and established market, even if it's not quite matching that explosive growth we see in Asia Pacific.
Right. Are there any particular European countries shining in this space, or perhaps some that are growing maybe more modestly compared to their neighbors?
Yeah.
Does that raise questions about different market dynamics, maybe?
Yeah, we see a fascinating mix here, actually. The United Kingdom is showing strong performance, expected to touch nearly $1.7 billion by 2033. That's at an 8.2% CAGR, so quite high.
Hmm.
Germany also has a robust 7.5% CAGR, forecasted to hit over $2 billion. Luxembourg and Denmark also showing stronger momentum, growing in that low to mid 7% range. However, then you see countries like Switzerland growing at a much more modest 4.5% CAGR.
And quite a bit lower.
Yeah. And Italy and Sweden also showing slower expansion compared to some of their European counterparts. This variation, it likely reflects a blend of things: market maturity, perhaps different regulatory environments, maybe even cultural preferences towards shared ownership models.
Interesting.
Some established markets might just have less room for that kind of rapid expansion, while others are still seeing significant uptake.
That's a crucial point, yeah. The diverse factors at play, even within a single continent. Okay, what about South America and Africa? How are they contributing to this global growth picture?
South America's timeshare market, it's projected to reach over $1.8 billion by 2033. That's with a nearly 7% CAGR, so solid growth. Brazil leads the region there, about 6.9% CAGR, likely driven by a growing domestic tourism market and its, very attractive natural destinations.
Sure.
Argentina, Colombia, Peru, Chile, they also contribute to this expansion. It demonstrates a solid, consistent growth trajectory across the continent.
In Africa, is it seeing similar patterns? Or maybe is it a bit earlier in its market development curve?
Africa, while it has a lower overall CAGR, around 5.1%, it's still experiencing significant growth in dollar terms, rising to nearly $1.7 billion by 2033. South Africa posts strong growth within the continent at a 5.6% CAGR, probably fueled by its diverse tourism offerings and internal market. Nigeria also shows considerable contribution. It's definitely a region with immense potential, likely in earlier stages of market development compared to other global players, but clearly on an upward trajectory.
So, okay, we've seen these incredible numbers, these regional breakouts, from Asia Pacific's just explosive growth to North America's continued dominance and this steady expansion pretty much everywhere else. But if we step back for a second, what does this all mean for you listening, and whether you're a global traveler or maybe just observing economic trends? What's truly driving this worldwide embrace of shared vacation property models, beyond just the raw numbers?
Yeah, that's the key question, isn't it? If we connect this to the bigger picture, the sustained growth, and especially that accelerated pace in places like Asia Pacific and the Middle East, it suggests several really powerful underlying factors, things beyond just statistics. It points directly to, I think, a global trend of rising disposable incomes, especially in emerging economies. More people simply have the financial means to invest in quality leisure experiences.
Right.
And coupled with that is the growing global middle class. They're increasingly looking for diverse, high quality, and importantly, flexible travel experiences that are also convenient to plan. And this model, it offers access to premium destinations, great amenities, but without maybe the long-term commitments or the responsibilities that come with owning property outright.
That's a compelling picture. From your perspective, then, what are the primary motivators? Why are consumers choosing this model over, say, just traditional hotel stays or even buying a second home?
I think it boils down to maybe smart asset utilization and this growing demand for curated experiences. Consumers are increasingly discerning, I feel. They want predictable, high-standard vacations in desirable locations, yes, but they also want value and they want ease. The vacation ownership model, with its pre-booked access often to a whole network of resorts and a clear cost structure, it presents itself as a pretty smart solution for many. It's about recognizing that people are prioritizing experiences maybe more than ever, and they're seeking more efficient, smarter ways to achieve those experiences without the typical hassles. And it also speaks to a desire, I think, for consistency in quality, maybe location, removing some of that unpredictability you get booking new accommodations every single trip.
This deep dive really paints a picture of a vibrant, definitely expanding global market for vacation ownership. From that impressive near doubling of global revenues predicted by 2033 to those specific high-growth nations like India, China, Singapore, Saudi Arabia, It's just clear this industry is undergoing a really significant transformation. It's not just about, the old image of beachfront condos anymore. It seemed to be about evolving consumer desires and this growing global appetite for hassle-free, accessible, and high-quality travel experiences. It's a really exciting space to watch right now.
Exactly. And this raises, I think, an important question for you, the listener, to consider. As these shared ownership models continue to grow and diversify, how might this fundamentally reshape the traditional hotel industry and maybe even the broader landscape of global tourism in the coming decade? Will we see more hybrid models emerge, new technological integrations perhaps, or even more creative forms of fractional ownership popping up to cater to this increasingly diverse and geographically widespread clientele? What new innovations might be just around the horizon as this sector continues its really dynamic expansion?
Food for thought indeed. Thank you for joining us on this deep dive into the future of vacation ownership. Until next time, keep exploring, keep questioning, and keep getting informed.